Guys, welcome back. Lanny is here. We are back on another show here, guys. I know it's been a hot minute. I've been away from recording videos, but I thought, you know what, screw it. Let's get back to doing it. It's been a wild 2023 so far, recording this here on July 20th, guys. Again, appreciate you stopping by. Today is going to be all about what is going on in the stock market, some of the big headliners, kind of what I'm looking at, what I'm thinking of, what I'm doing. Kind of curious to see what you guys are doing, but I thought I'd just shoot it to you guys straight right from the hip. Again, we're just going to kind of run through some stuff. I really wanted to get out some content for everybody here. Let everybody know, yeah, this channel is still going. Still got some coffee rolling here, but I'm excited to jump in right now. So guys, S&P 500 is up 19% right now for the year. It's been wild. Obviously, it goes true to kind of what the old saying goes. You can't time the market. You need to stay invested, stay consistently invested in the stock market, because you would have obviously done very well if you've been investing no matter what. Obviously, the motto, I know, Bert and I over at the DD, we always say, always be buying, and I'm always buying no matter what. You guys know that, by now, for me especially. I know I still have my Vanguard trifecta You Betcha rolling. I've got my $60 a day with Vanguard's S&P 500 ETF, VOO. I still have my $40 every day into VIG, Vanguard Dividend Appreciation ETF. And you can't forget about my staple, my main component of my dividend stock, taxable portfolio in Vanguard's High Dividend Yield ETF, VYM, which my wife and I, we crushed over 1,000 shares. Hit that like and subscribe button if you guys are loving the momentum that we have on the VYM, producing well over $3,000 in forward dividend income, which is the best form of passive income for your portfolio, in my honest opinion. But guys, market's been wild. It's red hot right now. Even with some of the other news that's been happening, with AT&T and their lead cables and Verizon kind of being tied in with that, the market's still saying, who cares about that? Obviously, Tesla showing slimmer margins. They don't care about that. Netflix having subscribers. They don't care, kind of different, news coming out in Netflix's, release. There's been a lot going on, but the market just doesn't care. Recession still looming. Market doesn't care. Another Fed rate hike coming up in a week. The market just doesn't care. So that's why you can't time the market. You got to literally put those headphones on, tune it all out, and just stay invested in the market and keep buying when you see that there's value, or stick to your staples that you're buying, every single week or every single month. I do want to touch on, the news about AT&T and Verizon. Obviously, there's billions of dollars at stake here from a tune of cost, standpoint, billions of dollars. AT&T stock price actually plunged down to like the low 13, mid 13 range. Obviously has now bounced back up. Verizon down to the low to mid $31 range. So maybe congrats possibly to some of those buyers at those stock prices. I own both of them, guys. So I'm in it there with you. I'm holding. I'm just dividend reinvesting the shares. Not doing any knee-jerk reactions right now. I'm telling you guys what I'm doing. I don't buy stocks to sell. Again, cash flow still is there. Still large customer base. Businesses now that you can really understand. Obviously with AT&T and the Warner Media and the DirecTV. Now you can kind of understand they have internet, they have cell phone, mobile data, so you understand, what they do. Obviously, they have a lot of debt. That's really the only way that these companies truly grow is by debt and passing on increases off to the customers and trying to grab the most market share, domestically and internationally if they can. But obviously, debt with the price right now and the rates, it's very expensive to borrow, very expensive to grow. Very expensive to grow by, towers and growing their network in general. So, that's obviously impacted cash flow, et cetera, and the fight for customers. I mean, the banks are fighting for depositors. Telecom is fighting for your mobile contract, right? And your internet deal. So, but again, I'm holding both, reinvesting both, not buying any more shares. Obviously I don't want to keep buying if there's some sort of negative news trying to protect the portfolio a little bit. They're not a large part of my portfolio, but again, I continue to hold. Sadly, continue to hold Warner Media, Discovery stock, or WBD. Still have that piece of junk in my portfolio. That's one of the spots that I might exit at some point and just reinvest back into like an ETF like VYM. So that was kind of my take on some of the AT&T and Verizon news. But guys, in case you missed it today, Kenvue, ticker symbol KVUE, the spinoff from Johnson & Johnson. Yes, J&J had a spinoff that occurred a few months ago. Their consumer brand company, which obviously all pharmaceuticals seem to be doing that simply because, hey, they're trying to unlock some sort of value for shareholders. Pfizer did it with Viatris. GlaxoSmithKline just did it with Haleon. And now look, J&J obviously just finished theirs with Kenvue. Kenvue holds Tylenol, Neutrogena, Aveeno, Listerine, Benadryl, you name it. Those types of consumer brands that they once had in J&J's portfolio is now a separate entity with Kenvue. Again, ticker symbol is KVUE. The big news, though, is that they had a strong earnings. The stock price for Kenvue is down, but the stock price for J&J is way up today here on July 20th. And Kenvue, though, announced their first dividend, guys. First dividend, 20 cents a share per quarter, more than likely, equating out to an annualized yield of a little over 3%. So again, another good, strong consumer staple branded company. But the question's still out there. What are J&J shareholders going to do here? When are we going to get our own shares of Kenvue stock? I know Johnson & Johnson, I believe they have until September or even November possibly to kind of let us know as J&J shareholders what piece of that deal or spinoff that we may get. I think there's a little bit of a time period that J&J has to announce that. So I'm not buying Kenvue stock. I know that there are a lot of shareholders out there that are. Let me know in the comments if you've been buying Kenvue stock. But for now, I'm just watching the news. I'm trying to keep my ears glued to what's going on with J&J, obviously, and seeing what's going on with Kenvue stock. Which J&J has now roared back to $165 to $170 per share. Was buying them when they were in the low 150s. But hey, J&J, the dividend king, they're not going anywhere. So I'm very curious what's going to happen with the Kenvue stock. So guys, what am I doing right now in the stock market? Again, market's up 19%, trading at like a 26 times current, earnings ratio. The price to earnings ratio on the S&P 500, it's very high. Not at an all-time high from a price to earnings standpoint, but much higher than they are historically. So again, 19%, nothing to scoff at. So what am I doing? I'm staying ready. I'm always staying ready for when a few stocks that I've been looking to build those positions get down to those sweet spots. Archer Daniels in the 75-ish range, UPS at or near 170 a share. Might be a while since I, will get a chance back there since they were up into the mid 180s already. CVS below 70. I think they're in the mid 70s now. Elevance Health, or formerly Anthem, ticker symbol is ELV. Love them under 430. At one point I grabbed them. Congrats to all you shareholders as well. I grabbed them in the 415, 410 to 415 range. They're back, I think in the 460s and almost 470. So hopefully there might be another 10% cut on that stock price that I can grab a share or two further. Unfortunately since I have a lot of my taxable investing out on Ally, I can only buy whole share. So, it's a pain to buy and drop, 400 plus on one share. When on the SoFi investing app, which is where I buy my automatic ETF investing, I could buy partial shares there. Those links are in the description in case you're interested in SoFi. But again, taking those stocks, if they don't hit my price points, I'm buying VYM every Monday, 300. Sometimes I'll put in 150 on Wednesdays. Really depends on how the savings rate's going for the month. Every day I'm still doing $60 into Vanguard's VOO, doing $40 a day into VIG. So no matter what, I'm grabbing the stock market. I'm grabbing dividend income. I'm grabbing yield. I'm grabbing growth. And that's what I'm doing, because to me, it's always be buying, always stay invested and consistently invest. So let me know what you guys are doing right now. Let me know if you appreciated this quick video and what other news that, you felt like impacted your portfolio that maybe kept you up at night, maybe woke you up in the morning. let me know in the comments below. Subscribe, like the video. Welcome back to the channel, guys. This is Lanny. I'll talk to you guys on the next episode.